Good morning, traders. I'm Dennis Dick.
And I'm Joel O'Connor, and welcome to Thursday's edition of Premarket Info.
Joel sounds a little bit like he's in a tin can or something. We had a little audio difficulties on his end, but he's going to be sticking with us, so you'll have to just excuse those. But what have the markets done here overnight, Joel? We are rallying a bit, it looks like.
Yeah, Dennis, the week closed yesterday. We settled at 1632 and a quarter, dipped a little bit under 1630, but we're coming up, Dennis, and we're testing yesterday's high, which is 1639 and a quarter. That's a big level to keep an eye on in order to keep this rally going.
And what led us out yesterday was ExxonMobil and Chevron. Like we thought, they were strong in the pre-market yesterday, and often pre-market strength can follow through into the regular session, which is exactly what happened. Exxon and Chevron both had their best days in a long time there yesterday. In a second here, we're actually going to introduce Rob Friesen here too, who's going to talk a little bit about seasonality, talk about ExxonMobil. Joel's going to bring up a chart of ExxonMobil right now, but you can see the big pop we had in the oil stocks here yesterday. What are you thinking on the ExxonMobil there, Joel? Are we going to follow through here today?
Yeah, we've already cleared yesterday's high, which was 88.99. Let's take a quick look at here at the pre-market. If we traded up to 89.11, going back to the dailies, Dennis, boy, there's just not a lot of major resistance in the rest of this 89 handle. Looking at the charts here, you got to go up to 89.48. That was a high on August 14th. So that could be your first stopping point this morning in ExxonMobil.
So we want to introduce here at this time Rob Friesen, who is president and COO of Bright Trading. Rob's actually, I'm a Bright trader. I've been known Rob and been trading with Rob here for the last 14 years. Rob, how you doing this morning?
Great, Dennis. Thanks again for having me on the show. I appreciate it.
Rob, tell us a little bit about Bright Trading. I talk about it sometimes on the show, but maybe you can back us up and tell us a little bit about what Bright Traders, what they trade, and how they're different than maybe your normal retail traders.
Well, Bright Trading is a proprietary trading firm, which means traders get to use firm money for their buys and sells. And every trader wants to expand their business and bring on more strategies, and it's great to have access to additional capital when you want to do that. You don't have to sell one stock in order to buy the other stock, or you're not under the pattern day trader rules, etc. So we definitely love to provide capital overnight, intraday, and that's what our firm's all about.
Now, Rob, a lot of your guys there, I know, they're more into pair trading, statistical arbitrage type traders. Can you just briefly discuss like pair trading to some of our listeners here?
Well, a lot of times it's very difficult to predict where things are going to go. It's much easier maybe to compare a couple peers and say that one stock is likely to outperform another stock within the same peer group. So by owning one and being short the other one, you can create yourself a relative value play or relative performance play. And so profiting from the changes in supplier demand between the two, profiting from the performance difference between the two, that's called pair trading. And we do a lot of that in addition to baskets and other styles of being hedged.
So a lot of your traders do different types like pair trading, also statistical arbitrage where they're looking at relationships between different stocks. But also, I know you were talking briefly about your traders look at something called seasonality. Can you just discuss seasonality for a minute and discuss what that means?
Well, seasonality would basically be looking at particular time frames. Another thing is called the calendar effect, how different times of the year the markets perform in a predictable fashion. Anytime you've got more than 50% occurrence in one direction, you're going to have a bias possible. And seasonality at the end of the month is also called turn of the month effect. We kind of use a 5-day window. Others use a 4-day window. Sometimes it's just the last day of the month and the first 3 of the new month. Sometimes it's the last 3 days and the first 2 of the new month. Regardless of how you approach it, through that entire 5 to 6, even 7 day window, there seems to be a bias that goes back, 100 years. And, most of the returns that the market has had have been evident just by being in positions over the turn of the month. It's statistically provable. I can cite lots of references to it. Anyway, we tend to look for discounts prior to the seasonality window, which we did get a substantial market discount. If you want to bring up a chart of just SPY there for a minute, you can see that going into seasonality, and the seasonality we tend to use at Bright Trading is 3 days before the end of the month. So that means yesterday was the first day of seasonality, and bring up. You got a daily there, okay? So we're started to turn around and pop up.
So typically, you're just saying that the last 3 days of the month typically show strength as the month's about to turn. Is that correct?
Right. There's just a calendar bias,
right,
and it's because, see, there has to be an explainable reason generally, and I think that it's because of payroll deposits and people. Those are basically liquid assets that people can then deploy, and whether it's pension fund managers that get allocations, or whether it's in the private sector, money goes back into the market, and that's been a bias that's been in play for 100 years already, and it doesn't seem to be slowing down at all. You probably get 10 out of 12 months where it performs right on cue within a calendar year.
Wow.
So
definitely
something that people want to use. So you would think then, if this is true, does it happen around the world? And out of 30, I think it's 34 markets that are something that we could trade and track, it's been occurring in 30 of them. So in 30 market centers around the world, out of 34 have seen this same turn of the month effect over the last so many years, as long as they've been in existence.
Wow, that's pretty cool to know that you often see strength coming into the end of the month for those different reasons. A second thing I know you guys do is you look at like the seasonality on specific like sectors. Like I know we were talking just briefly before the show started on the ExxonMobil Chevron, and you were saying typically this time of year the oil is out of favor because we're a little bit warmer. We're not into the cold months here yet. And ExxonMobil has had a pretty drastic, obviously, downturn here before the recent update yesterday, but it's been very much underperforming the market here for the last month.
Yeah.
So I guess that trade has kind of been working up till yesterday, correct?
Well, the XOI, which is the oil sector itself,
Yep.
Normally is a short, from September through November.
Okay.
That's typically what we see in terms of seasonality. However, we have a macro picture catalyst that is overriding what would normally be seasonality at this time. Now that means it could still come into play, and then we get even a better seasonality play because we have all this premium. But I mean, Exxon makes up a large percentage of XLE, for example, and you see that nice healthy bounce after a big downtrend. This isn't the time to be a hero on shorting that.
Right.
We've got to respect the macro catalysts that are out there.
So so you might have an underlying like negative effect of seasonality, but with that macro Syria effect, that's going to overpower that. So if you're just playing it from looking at it from the seasonality, you could get hurt here because the macros, obviously, with that Syria is going to probably pump oil higher.
Well, and if something gets resolved there, you've got a great short. It's
right.
No different than
right.
It's no different than VXX when it normally is a decaying product because of contango and the instruments that make up VXX. It's over the long sample. If you want to bring up a monthly chart, you'll see how incredible the VXX decay actually is.
Yeah.
So here's what happens.
Wow.
When markets are suddenly bouncing back and fear is dispelled and money managers don't have to buy puts any longer to protect other people's money, like the portfolios they trade, you see a rapid decay again on VXX. So you have the overlying theme of it's a constantly decaying product that they reverse split, but then you have your premium that comes occasionally based on fear in the market. But as soon as things start to stabilize, that's a great short. Um, we can take the same underlying theme of seasonality on oil, for example, and say, you know what, we've got this temporary premium because of another catalyst. Let's let it run its course. If we start to see things settle down and everything's getting factored in, then we could have our seasonal short again. So you have to just respect what the latest catalyst is and whether that is messing with your typical biases. No different than somebody could have a technical short on anything out there, and something else could come along and ruin that trade. And that's why we trade a lot of pairs, Dennis and Joel, is because uh, the market can interfere with your great idea, right?
Right.
You can have the best setup on any single stock, but the market could come in and interfere with your trade, because in general most stocks are correlated with the market. So if the market wants to rally, it could wipe out your setup on your technical trade and you'd get stopped out. With a pair trade, you might still benefit from the other side of the trade performing along with the market, offsetting your losses, or even outperforming and getting you a profit from what would have been a loss.
So it's all just relative, looking at the relative performance, or the relative performance of each individual stock, and then that takes that whole macro risk kind of out of it, correct?
Correct.
So, and that's what most of your traders there at Bright Trading kind of do, is more of that stat arb, looking at these different seasonality effects, looking at numbers, and obviously if something works 55% of the time, there's an edge there.
It could be, yeah. Mm-hmm.
Well, that's great, Rob. All this stuff very insightful for us and for our listeners as well. So we do thank you. Do you mind sticking around here? Obviously, we got to go into what's happening elsewhere in the world here. But do you mind sticking with us for the questions and answers, possibly there at the end?
Yeah, no problem at all.
Okay, Rob. So thanks a lot, Joel. Are you still kicking around there?
I'm still here.
So, Joel, we do have some news here this morning. Verizon and VOD are popping a big time, and I mean Verizon is popping big time here. You got a potential deal on the table for Vodafone's 45% stake in Verizon Wireless here this morning. Verizon is seeing levels that it has not seen in about a month. It's been a really bad month for Verizon, but I guess it was down like an escalator, up like an elevator in this case, because Verizon just popped over $50 here this morning. It's an incredible move.
Yeah, we just hit 50-20 here in the pre-market on this news. Very uncharacteristic move for Verizon. Hasn't traded at this $50 level here since the beginning of the month in August. We did have a high right around 50-30, 50-40 here going back to the beginning of August. We'll keep an eye on that level. Going back up, we got all the way up to 52. There's your major resistance, but Dennis, this is a huge move and a very, very heavily traded issue. Do you think the open orders in the book are gonna perhaps weigh it down on the open, or do you just think?
I don't know. There's so much volume here and so much. 1.8 million shares already traded here in the pre-market, so it's hard to say that anything's going to hold this thing down off the bat. But I do think this big 50 psychological level here, I know we topped out 1, 2, 3, 4, about 5 times in early August between 50, like 22, 50, 45. So I think you get above this $50 area, we may run into some trouble there. What is the pre-market high there on Verizon here, Joel, just for our listeners?
50-20.
50-20, which kind of coincides with that area that we had in early August where we were running into some trouble. But the stock's got gas. Obviously, there's an overall fundamental news here. We know technicals take a backseat when you have fundamentals. Vodafone here, Joel. Let's do a quick technical on this one, too, because it is popping as well. I guess this is good for both companies because Vodafone stepping up and breaking out to a new 52-week high, trading 31.83 right now after closing at 29.41.
Yeah, that this deal seems to be making everyone happy. Busted up to 32.12 in the pre-market. have pulled back down here and finding some mild support here at 3160. Looking at the dailies here, you are busting out above that 3102 level, the recent high of the move. So look at that 3160 level as minor support and major support coming in at that old high at 3102.
Couple earnings stocks to talk about here. This one kind of shocking to me. Guess this is an absolutely incredible move. It was actually popping even higher last night after hours. They reported earnings of 47 cents versus 36. Revenue 639 million versus 622.8 million. So they beat on the top, they beat on the bottom. The guidance was kind of mixed. They see Q3 a little bit lighter, but they see earnings per share guidance. They raised it for 2014, but lowered sales guidance for 2014. I guess it doesn't matter. It looks like they're squeezing the hell out of the shorts here this morning. Stock is trading up over $4 at 31.57 right now after closing at 27.31. Has been as high as 32.50 after hours last night, so it's pulled back from the after hours high. But this is an incredible move for Guess.
Yeah, interesting here. If you look at the after hours, it did pop up and it hung above 32 for several hours here. Gave you a shot to short it there, then it popped up to 32.50.
Actually,
So
I could tell you about that pop up too. There was somebody that was wanting to drive this higher because obviously the report was pretty good, but I thought it might start to run out of gas up a dollar or two. But somebody was coming in and sitting on the bid, and they were whacking the bid, and then he moved higher, and he kept moving higher. And you talk about that all the time too, Joel. How if you've got a ton of stock here and you want to press it higher in the after hours, it's a lot easier to move a stock after hours than it is in the regular session. And somebody wanted this stock higher, and they got it higher.
oh, the old bait and switch trick, huh?
But then everybody jumps on board too, and obviously now it's just traded a ton of volume here. So the stock has had an incredible move here overnight.
Yeah, I'd keep a close eye on that 32.50 level. You had a couple highs back in August above 32 before it fell off the cliff. So I'd be aware of long this thing, in the 32 handle because it could easily fall out of bed below 31 and a half. Based on this pre-market trading, I would. Or, I'm sorry, based on the pre-market trading, I've supported 31. I would not want to be long this thing if it took out 31.
Campbell's Soup also reported earnings here this morning. 43 and a half, just ticked down to after closing at 44.71. Their earnings were 45 cents versus 42, but they were light on the revenue, 1.72 billion versus 1.83 billion. Trading down obviously, so it looks like Campbell's Soup is not good food here for investors today.
Yeah, we're looking at just closed very weak yesterday. Closed right off the low of the day, 44.71. You do have some nice support from late June, early July at the $44 level. So if the decline continues in that, look for support at 44. Oh, it's at 43 and a half. I should have pulled up the
Just
pre-market
100
chart.
shares though, just 100 shares
Just
down there.
100?
Yeah, not a ton of
Okay.
volume there.
Okay, 44 would be a good swing number on that one.
Let's go over to the S&P 500, the major components here. Apple had a little bit of a bounce back day yesterday. Closed a little bit weaker, but then is bouncing back here again this morning, up $3 with the overall market. 493. I was looking at it from this magnet trade perspective the last few days. It got down to 486, kind of almost tried to put in a double bottom down there, and it has been popping up. I was looking for it to possibly get back to this 500 level. I don't know if it's going to do it or not. Do you think Apple has the gas to get to 500 here today?
If the market continues its momentum, just keeping an eye on what it did yesterday. I mean, the S&P's kind of sneaked down and made a new low by like only a point or so. And lo and behold, the second biggest component, Apple Computer, missed its low by 30 cents. So that 486 level, great support, coming on the upside. Minor resistance, 95.80 was Wednesday's high. We clear that 95.80 desk, I think we'll float back up to 500.
And Google here did hold that level that we thought might give it some support yesterday. We were talking this 847.22. 2 days ago, bottomed 847.90. Yesterday, bottomed 847.77. So we keep finding buyers here in the $847 area for Google. Doesn't want to give way there because we know there's a lot of air below that level, but that level continues to hold, and we are bouncing $4 here this morning on Goog.
Yeah, I mean, you Google fans out there, if you're looking to buy this thing on some weakness, you definitely have a reference point here at this 847 level. It's bounced off there a couple times, getting a little bounce of it today. Of course, the next time it does come down to 47, what's that could be like the fourth or fifth time in the last few months it's been down there. So below under 847 here, all bets are off on the move along.
Let's take a look at Facebook here, popping again this morning. It held the 40. It took it out 2 days ago, that 40 level, but quickly got back up over it. Tried to test it yesterday, got down to 39.88, but again bounced back up. Closed fairly strong, and I always like to watch the way the stocks close. This one closed fairly strong despite the market closing kind of weak. So you got to love the relative strength there in the Facebook with that stronger close. And then obviously now it's popping up another 50 cents here today, up to 41.02. So do you think we can challenge up there? That 42 area gave us a little bit of trouble 3 days ago, up at 41.94. Do you think we can challenge that in the next couple days?
When you have a significant high like that around a whole number, and then you get a couple point pullback, will usually try and step out a little bit ahead of that. Interestingly, we always talk about trying to figure out what the high of the day was or higher, the all-time high in Facebook, even though some people got printed at 45. Well, we know some people got printed at 42 in that IPO, and they took that opportunity there when it got 6 cents away from it. So even if we do get through it there, I'm not looking for a huge follow through. I think it's going to take a couple days to shoot to that 42 level. People let something go 20 points against them, and like, hey, if I ever gets back to break even, I'm getting out. So that could be the attitude there at $42.
Overall market thoughts here, Joel, as we pump up 4.5 points. It seems like we get into the 1620s and where they're buying them there. Obviously, we got down yesterday and we've bounced back from that whole 1625 area. What do you think the market's thinking here? If we continue to get back down in the 1620s, it gets concerning, but we are bouncing here again. Are we going to build on yesterday's little bit of a rally there?
You have a little bit of a pop here, and you've been able to clear 1638, but you have not been able to take out yesterday's high. I'm always watching the daily highs and lows. So 1639 and a quarter, that's the number I'm looking at on the upside. You break above there, you hold the 1640 level. Minor support in the 1640 handle, but got to clear that 1639 in order to get things started.
Well, that's our show for today. Have a great trading session, we'll be back with you tomorrow.